Yes,
Very good evening to everybody present here. So, welcome to the third session of the monthly program on Code of Ethics being organized by the WRC. It's being organized by the Ethical Standards Committee of WRC. And as we have already briefed all of you, we have now organizing every month at least one program on Code of Ethics. And today we have a very, very important topic, because I think there a lot of confusion arises. What are services which are permitted and what is not permitted as far as a chartered accountant in practice goes? And I think we have a very, very learned, I think someone whom we consider as an authority on Code of Ethics, Vaze sir. We could not have anybody better than him. And I'm sure it will be a knowledge. I think it will clarify a lot of doubts for all of us. So I welcome all of you to this very important session. I'll now request everybody to kindly come to attention for the ICI motto.
Yaesha supteshu jagrati, Yaesha supteshu jagrati. Kamam 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 kamavusho vusho nirvimanaha nirvimanaha tadeva shukram tada brahma tadeva amritamuchyate tasmin lokaha shataha sarve tadunatyati kaschan etadvaita
Thank you. So just to brief all of you on one more initiative from WRC that we are taking on Code of Ethics. We are now releasing every month a video on Code of Ethics, where we are trying to cover some important questions that are there related to the various aspects of Code of Ethics. So last in May, we had released a video on the action that a incoming auditor needs to take related to unpaid fees of outgoing auditors. This time we will be shortly releasing a video again on what are permitted activities, not permitted activities. Some part of it will be covered here also, but these are additional activities that may be. So we will be trying to cover that in the video. So now, not taking too much time from our expert faculty, I'll first request our Chairman WRC, CA Murtuza Kachwala sir, who is also with us, to kindly give his remarks on this session.
Thank you, Rahul bhai. A very warm good evening to all the participants, and thank you very much for joining on this session on project. Let me welcome the learned and respected P.S. and Vaze sir. Vaze sir, thank you very much, sir, for accepting our invitation.
My pleasure.
Sparing your valuable time. Yes, sir. From the time I know Vaze sir, I've been seeing him for 20-25 years, and I think he would have taken hundreds or thousands of lectures on ethics. And he would have attended so many cases on behalf of chartered accountant, defending them at the disciplinary committee. So we're really grateful for all the good work that you do for the profession, sir.
Thank you.
Let me also thank the coordinator Faizan today, and a big congratulations and thank you to Rahul Parekh for the really commendable work that is being done in the ethics committee also at WIRC. So like releasing the videos on a regular basis every month before the 5th of the month, and then again conducting a program on ethics every month. And we are also trying to do like a compilation of FAQ. And in addition to that, he is also very active on the Internoid committee. He is the chairman there as well. So Rahul bhai, thank you very much for all the good work.
Welcome, sir.
Friends, this year the theme at WIRC is Leap Towards Excellence, Achievement and Development. And we have identified certain goals, and we also listed out certain activities and the actionable items, and we are tracking each of them. And like couple of goals which I would want to touch upon here is like ensuring that the knowledge of members goes up technically. So we're doing various sessions on traditional area of practice like direct tax, indirect tax, accounting standard, or company law. But in addition to that, we are planning so many different refresher courses on insolvency and bankruptcy, internoid, on cooperative, on valuation, so that members can understand these areas of practice also, and maybe they can slowly start doing something in addition to the traditional area of practice. The second goal is like to equip members technologically, and that is where we're doing lots and lots of courses on technology, and be it Power BI, Power Query, be it Tableau, be it Excel macros, or be it our Tally Prime. We are doing multiple courses. I would request everyone to please take benefit of those and update yourself so that we can adopt the technology in a day-to-day life. So with that, I again welcome everyone. Very happy learning to all of you. And over to you, Rahul Bhai. Thank you very much.
Thank you, sir. Thank you very much. We have a very dynamic chairman who's pushing all of us to perform. So that is why we are also performing. And so thank you, sir, for sparing so much. Your energy is infectious. So now I would now request our coordinator, CA Faizan Daboiwala, to kindly introduce our faculty for today. CA Vaze, sir.
Thank you, Rahul, sir. Yeah, thank you, Rahul, sir. A very good evening to one and all present here. Welcome to this today's program on Code of Ethics virtual program. Now the topic for today, that is permissible as well as non-permissible services for a CA in practice. I believe this topic is of great significance, and there could have been none other than CA and Vaze, sir, to help us understand this topic in a better manner. So I would like to thank Murtuza sir as well as Rahul sir for giving me this privilege of being able to introduce such a stalwart of the profession. Mr. Chandrasekhar Narayan Vaze is a BCom, FCA, ACS, as well as LLB. He's been practicing as a chartered accountant since 1980. He's actively participating in the work of many professional bodies of chartered accountants like the Bombay Chartered Accountants Society, Chamber of Tax Consultants, etc. He has delivered lectures as well as written articles on taxation, banking, and allied subjects, as well as on the Code of Ethics of Chartered Accountants. He has participated in discussions on radios as well as televisions. He has pleaded many cases of misconduct before disciplinary committee, council, appellate authority, etc. He is a trustee as well as ex-president of Maharashtra Seva Sangh, Mulund. He is a president of Sanskrit Bharati, Konkan Prant. He is a director as well as ex-chairman of Jan Kalyan Sahakari Bank Limited. He is a recipient of Yog Mitra Award from Yog Vidya Niketan, Vashi, Navi Mumbai. He is also a recipient of Best Social Worker Award from Senior Citizens Association, Mulund. With these few words, let me welcome CA N. Vaze, sir. Sir, the floor is yours. Thank you.
Thank you, Faizan. I also take this opportunity to welcome CA Ruta Chitle, Regional Council member and our Vice Chairman.
Thank you, sir.
Vice Chairperson on the Code of Ethics Committee. Welcome, madam. She will also be with us through the session and taking it forward. Sir, Vaze sir, floor is yours, sir.
Yes. Namaskar and good evening to all of you. WIC Chairman and my very close friend, Murtuza Kanchwala. Then, of course, Rahul Bhai Parekh, who has been instrumental in organizing this particular lecture, sitting at Vadodara. WIRC Vice Chairperson Ruta Chitle Madam, and the coordinator Faizan was very kind enough to introduce me to the audience. Well, friends, many of you might have heard on many occasions on Code of Ethics. And literally, I have spoken more than, at least 400 to 500 times so far on Code of Ethics, but different aspects. Earlier, I used to speak more on the general principles of Code of Ethics, then the case studies, then what are the do's and don'ts in respect of Code of Ethics. Then our institute was kind enough to entrust to me a different topic called working paper management related to Code of Ethics. And then also Institute was kind enough to give me another topic called Scope for Research in Code of Ethics, which was altogether an innovative topic. And then also the threats and challenges to the profession, which was, I had the privilege to speak on an international forum. But I have special compliments to give to WIRC for choosing this particular topic, which I had never thought of. And that is why WIRC people, and especially your ethical code committee, the ethical standard board of our WIRC, deserves compliments. It's a very, very important topic. Only limitation in that topic is that in all other topics, I always share my experience with the live cases which I have handled, and that would make the presentation little lively and interesting. Here, this is relatively a new topic, because not that it was totally a new invention as such, but it was not given that much of importance all these years. But with this new code of ethics, and especially part 1 or volume 1, this topic has assumed more importance. More and more thrust is given on the services that can be rendered, that is with reference to the independence of the professional. Independence earlier was only, perhaps we can say that it was only like a myth, in the sense that my very basic fundamental argument is that when a client is appointing you and he is paying his fees, your fees to you, then there is very little scope for us functioning really independently in respect of audit function. But nevertheless, there we can't perhaps help, and this we have to accept that reality. But then within those constraints also, how can you become independent? Now, all these years, whatever I was speaking on was while practicing what precautions you should take. That means, how do you discharge your functions so that you are not caught under the clutches of code of ethics or disciplinary mechanism. Today's topic is a little different in the sense, while accepting the assignment itself, what application of mind you should do. So my earlier presentations used to be how you discharge your function. Now, whether to accept that assignment or not itself is the focus of attention for this particular evening's topic. So that is the distinction. Friends, actually here, most of the discussion would be perhaps theoretical, because especially when we are practicing, I believe that most of the audience, they will be either proprietors or small concerns like 2 or 3 partners. This particular topic has more relevance when you are having large listed companies audits or public interest entities, because the restrictions are more in respect of public interest entities. One more important aspect of this topic is that permissible or non-permissible services in respect of CA in practice. Now, CA in practice we usually take for granted, but actually it has been defined. The term has been defined in the Chartered Accountants Act, and Section 2, subsection 2 defines it as CA in practice, which is not a very, you can say, very that type of a definition which we should specifically learn about. But by and large, you can mean that whosoever is holding certificate of practice and doing whatever services he is rendering, like traditionally accounting and other things, plus management consultancy, this by and large is a CA in practice. So in short, whosoever is holding a certificate of practice is a CA in practice. So let us simplify that decision, because I must deal with each and every word of this topic. Now we go to the permissibility. Now permissibility, the basic criterion is that you have not only be independent, because in your mentally also you should be independent, and the world should perceive that you are independent. Just as in audit, we always say that the work should not only be done, but it should be seen that it is done. So your independence also should be perceptible. Your independence should be visible. Now, for example, of course, I agree that it is a mental state. It is a state of mind, whether you are acting independently or not. And this topic precisely gives you guidelines as to how you should not only be independent, but also appear to be independent. So while selecting the assignment, while accepting the assignment, the precautions you should take so that people should not feel that this is the person who has taken the assignment of a relative or his independence is likely to be compromised. That kind of allegation you should always safeguard yourself against. And therefore, what are the possibilities? What is the likelihood where that particular independence will be challenged? These are the things we will be seeing. Now we will go to the slides, technical aspect. See, independence, as I always say, that eternal vigilance is the cost of independence. It should be eternal. Just as for our country, our soldiers are always round the clock, vigilantly safeguarding our borders of the country. Same way, our profession, our independence, our values, our ethics, we are supposed to be eternally vigilant. And therefore, for ethics, there are 5 fundamental principles which we have studied or read time and again, but still it is necessary to brush up or to recapitulate those things, because all the subsequent discussion is centering around these things. These are the fundamental principles, which probably may sound theoretical, but yes, it has a great practical relevance. First and foremost is integrity. Integrity is what? Your straightforwardness and your honesty. See, with a client, if you have certain obligations, if the relationship is such that you cannot tell him by very assertively that this is wrong, whatever the accounting he has done is wrong, or whatever attitude he is having is incorrect, unless you can put your foot down and unless you have the courage to do so, your integrity will not be visible. So integrity is a straightforwardness. You cannot have a goody-goody approach that whatever client says we have to, I am fully aware of the reality of the profession, that yes, especially when you are new in the entrant in the profession, you have to do a lot of compromises because it's a question of survival for you. I am aware, fully aware, because I have myself gone through all these pains. So although I may sound a little theoretical to you, but yes, in reality also, in practice also, these things matter very, very much, because how you shape your career, how you grow in the practice depends on right from beginning what straightforward approach, what honest approach. Because right from beginning, if you have the approach that of compromising with values, compromising with truth, then how will you perform the function of true and fair? So honesty and straightforwardness can come only by courage, and the courage can come only when you are not affected by the threats to these basic objectives. So the threats also we will consider. In fact, the basic theme of this presentation is these objectives, the fundamental principles, and the threats which are there. And ultimately, we will go as to how you safeguard yourself against these threats. So this is the first, integrity. Then the second objective of the ethics is objectivity. Objectivity means basically you are not compromising the professional judgment. The judgment should be on objective facts. It should be on a rational basis. It should not be subjective because you feel so. It should not be subjective because client will be pleased if you take that attitude. It should be with your knowledge and whatever are the mandates of our profession. You have to be very true to those mandates. You have to be very loyal to those aspects or principles, and without any bias, without fear or favor, what you usually call it, without fear or favor. So objectivity means whatever conclusions you are arriving. Say, take the concrete example that when you classify a cooperative society and allot them the grade A, B, whatever is that, class A, class B. Now you cannot say that the overall functioning of the society is good. The premises are very posh. The overall environment is very impressive, and usually they are giving good dividend. These are not the criteria. The criteria is certain objective standards which are laid down in the respective act, like Cooperative Societies Act or the guidelines. On that objective basis, you have to analyze, allot the marks, and then say whether it is a classification A, B, or C. So there are objective standards of determining a class, and it is not your own subjective judgment. So objectivity is another very important principle of ethics next to integrity. So integrity is the utmost, because only when you have integrity, you will have subsequent objective or subsequent values. So that is objectivity. Third is professional competence and due care. This is also very, 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 very important in the sense that professional competence is not just you have passed the exam. Unfortunately, I have come across many people who have, after about first 2 or 3 years of practice, they have almost given up the updation. They have almost given up the studies. You have to always, as Swami Vivekananda had said, sharpening your saw. That means you have to always be vigilant and upgrade your knowledge, because our profession is very, very dynamic. Earlier, in good old days, it was more or less static. But of late, and especially after these, after 1991, when we have liberalization, globalization, there is a total paradigm shift in our professional approach, because then many newer concepts are coming. And therefore, this new culture, new environment, and even the scams all over the world are also so increasing. And therefore, from international, and when there are foreign collaborations or MNCs functioning in India, that means we have to gear ourselves up so that whatever we attest, whatever we certify are becoming, or rather, they can take it at face value. Earlier, they used to be discounting our value, our certificate, or what the value of our signature. But now you have to gear ourselves up so that with the current knowledge of all the financial things as well as the technology, you are upgraded, and so that you can attain and maintain the professional knowledge and to act diligently. And that is our CPE. But CPE is not enough. Unfortunately, our people, chartered accountants, take CPE only as a compliance. It's not a compliance. You should understand the spirit behind the CPE. It is not that 30 hours which are sufficient. How much attention, how much focused you are in upgrading yourself is the real test of the CPE, or this particular aspect of professional competence and due care. So due care can come only when you are competent. Otherwise, otherwise there is an ignorance is a bliss. You don't know even that these standards are applicable. You don't even know that these provisions are applicable. Then in that scenario, and there are many like that, means their knowledge is stagnated. And I also agree that with the age, advancing of age, it is very difficult for one to cope up with these new things which are coming conceptually. But still, you have no other go. Otherwise, you have to be very choosy in your practice so that you have certain limitations and you don't accept the audits which are very challenging. Next is confidentiality. Of course, confidentiality, we are a professional, we are having a fiduciary capacity. So in that, you can't compromise on this aspect of confidentiality, because the credibility is the foundation of our profession. The client trusts all his financial things with you, and he entrusts to you so many aspects which are very delicate, which are very sensitive. And if they are leaked outside, where there are many people would come in serious problem. That does not mean that you should keep even the wrong things as confidential. In fact, it is your duty. Remember that we are financial police. So we have to do the financial policing. And lot of scams, scandals, and all the financial debacle or indiscipline is now visible. That is because perhaps our profession maybe has not taken the audit function that seriously. We have always been accommodating the client. We have always been doing the audits in a manner that suits the client, and with the major obsession with the tax laws. That is a reality. But we need to introspect now. And we have to somewhere, if your signature has to command any value, then you must remember that all these basic objectives of ethics, if you follow, only then our signature and our profession will perhaps come up at the earlier glory. Nowadays, it is the profession is on the crossroads because there are many attacks, even from the government side. All these aspects are relevant. What I am talking is not merely the theory or the philosophy, but why there are things which are coming up which we are not very comfortable with. Even in the disciplinary mechanism, even in the code of ethics, all the regulations which the government is and also in respect of many of the aspects which were earlier exclusively the monopoly and we on our bread and butter or our survival was dependent on that. Even on those issues now, government is not considering chartered accountants to be so indispensable or exclusive. And therefore, there is recently a degree of suspicion about the manner in which our profession is being conducted. And that's a reality, whether right or wrong, it could be a debatable question. It could be perhaps people will be very sensitive about many of the aspects. But yes, it's a reality because as I told you, in a very responsible organization, which was issuing visas to some foreign country, they had specifically mentioned in the checklist that please avoid bringing chartered accountant certificates as the same are often found unreliable. So if that is the perception of the people, you have to overcome that. You have to erase that perception from the minds of the people, which is a very Herculean task. And then the last is professional behavior. The behavior, the dignity with which a professional should behave in the society. You cannot afford to be very cheap. You cannot afford to do things like, which are not very dignified, which are not considered. You have to maintain your stature. So all these behavioral aspect is also important, and all this is a combination. All these 5 objectives will make you really ethical. Because in ethics, they always say you are either ethical or unethical. There is no in-between stage. So you have to uncompromisingly keep all these 5 objectives in mind. And now what we see today's topic is that it's not that like a yes or no type topic. Means whether this is permissible, this is not permissible. This is not the case. I am not going to deal with that. In fact, my PPT is quite speaking, so that once you share it, everywhere I have given the remarks that what safeguards you should mention and what safeguards you should take. So that if you take that, that means the answers are dependent on certain factors. There are very few questions which you can answer yes or no. Because another concept I must share with you is that now our code of ethics is divided into 3 volumes. Conceptually, you must be very clear on that. 3 volumes of that, out of that, volume 1 deals with the international international standards of ethics, which are adapted by our council to suit the Indian situation. But these are the internationally accepted principles of ethics. Now, in those principles, these concepts are discussed like independence or other things which I just now mentioned, objectivity, integrity, and all those things. Now, this is to some extent a little philosophical thing. If you read it, it sounds a little philosophical. It's not concretely giving that this you should do, this you should not do. It only says that yes, what are the threats that are likely to be there on your integrity or on your functioning, and how you tackle with those threats. This, for example, independence. Now they have described independence as a special standard they have added. Many additions made in the standard of independence. And then that independence, they have given examples. But examples, there cannot be any exhaustive list of examples. So volume 1, which we often tend to ignore because we are more concerned with volume 2. Volume 2 deals with the actual statutory aspect, which we chartered accountants are more familiar with. Like there are laws, there are rules, there are bylaws, there are sections, there are case laws. This aspect we are more comfortable, we are familiar because we deal with company law, we deal with income tax. Whereas part 1, there is no law as such directly, but it's the philosophy, it's something like a jurisprudence which we can say. Jurisprudence means the philosophy behind the law. Our law, Chartered Accountants Act, disciplinary schedules and all the disciplinary procedure, they are all based on these principles. Like the common principle, we always say the principle of natural justice, for example. Now the laws, when Income Tax Act says natural justice means it says that the opportunity of opportunity of being heard should be given. Now this is law. Or say reasonable notice, 14 days notice, 21 days notice. This is also incorporated in our ethics. So this is the implementation of the basic principle of natural justice. So natural justice is a philosophical thing, perhaps, is a legal thing. And how it is given effect to in the act? By giving a proper notice, by giving a proper opportunity. This is the act. We are more familiar with the act or the provisions or the sections, and therefore volume 2 is of direct relevance to us because it is more, we are familiar with that language and we are familiar with that concept. But what that law we must bear in mind that volume 2 is based on the principles discussed in volume 1. Today we are going to learn volume 1. Although in volume 2 also there are certain situations which are contemplated, which are going nearer to the principles which are now we are discussing in volume 1. So today we are more concerned with volume 1 and volume 3. I must complete that part of the discussion. Volume 3 is on case laws. It's a compilation of case laws. Now, very frankly, in our code of ethics, there are so many different situations that there are no two situations which are identical. Therefore, there is not much really significance on the case law because ultimately that there is a principle of consistency in everywhere in the judiciary. But in our case, what happens is there is every year there is a change in the committee. There is every year in the change in the disciplinary panel. And therefore, that kind of consistency, although they maintain, still there are many things which are giving a deviation from the consistency. But basic principle will remain that yes, rules of natural justice and everything should be there. So now we are considering what are the threats and the logic or the answer or the explanation whether this service is permissible or not is based on these threats. Therefore, if you learn these threats properly, the subsequent discussion is only a resultant or a consequential thing. Because there everywhere you have to apply whether this threat is attracted or not. So initially I agree that you will find that perhaps this will sound a little theoretical, but now I'll give you a concrete example. The case which I had handled. See, there was an internal auditor of a very renowned trust, charitable trust, very big trust it was. Now, when he passed his CA, he got that initial assignment of internal audit of that charitable trust. He started doing that. Then there was a girl who was in the account department. She was just a junior clerk there. Now, he was auditing the financial affairs of the organization and also he got involved in the affair with that girl. And therefore, they got married. He did not do only the affair, but he got married. And gradually over 20 years, this girl became the chief accountant of that organization. Now, the relationships were very peculiar in that because the chief accountant of an organization is your spouse. Now, whether you should continue there, that means times change. The situations change. So there, as I told you, there is not a yes or no type answer. Probably when that his wife was a junior person there, probably this would not have mattered. But when she rose to the position of the chief accountant, the things would be different. So the first threat is the self-interest threat. Before that, I must also deal with there are certain concepts or basic expressions which are more commonly used. There is nothing great in that, but still the more commonly used expressions are professional accountant in public practice. Now, professional accountant in public practice and public interest entities. Now, where obviously by common sense we can realize that yes, when public money is involved, public stakes are involved, when there are many important things are involved in that particular public sector undertakings, for example, or undertakings of very strategic importance, or where public money is invested. All these are public interest entities. And professional accountant in public practice means you and I as chartered accountants, because we certify the things that to be true and fair. Now, another word which is often used is assurance and audit. And I was always wondering as to, because sometimes these are used interchangeably. Audit and assurance we often use interchangeably. In a big firm, perhaps there could be some distinction which is recognized by the people working there. But otherwise, for us, the distinction perhaps would be that audit is overall overview of the particular thing, financial statements that we report on the overview, in the sense that we say that it is true and fair. Earlier the expression was true and correct, but it is not so now. We don't say that it is true and correct, but it is true and fair. Fair means, yes, there is a fair degree of correctness in that, fair degree of reliability on that. But we don't always say that it is absolutely, each and every figure is absolutely 100% accurate. It's an overview. So overview say that by and large, these show true and fair view of the financial affairs of the organization. This is audit. When it comes to assurance, assurance means you are assuring something to someone that it is not only true and fair overall, but a particular figure or a particular aspect, the degree of its, you can say that particular degree of confidence which that user will have in that is enhanced. For example, you say that we certify the export sales of an organization for last 3 years, or we say that the cost, or we say that the consumption of particular aspect, particular material in the production of this. Now there, it's not merely an estimate or it's not an overview, but we specifically certify that yes, this is the whatever are the grants received, how it are utilized. Now, for how we have to certify the salaries paid by that organization, which is now financed by the government in terms of grant or subsidy, or an industrial organization where they have made investment in the capital assets. And then there is a scheme of incentives or subsidies. Maybe the incentive is in the form of sales tax, or earlier it was there, or the subsidy to help to finance the capital asset. Now there we have to categorically certify that yes, this is the cost incurred on the machinery, on the building, on the land and other things. So that is assurance. So assurance means you are assuring something with greater degree of the confidence, or greater degree of confidence that the user will have. So these are the basic concepts that, because now in this all presentation, there is always a mention of non-assurance service. So audit or non-assurance service also is there. So we have to be careful about using this. Now, first threat to this is self-interest threat. Self-interest threat means what? Ultimately, in the financial things which you are certifying, that certifying means if there is a conflict of interest, that if at all my livelihood, if at all I have very few clients, for example, I am just new entrant in the practice, and I have got only 2 or 3 clients, or sometimes we start only with the 1 client. If my interest, my entire livelihood is dependent on this particular client, then in his work, I am likely to compromise on the principles of accuracy or principles of objectivity. So this is a threat to your objectivity, because if you are interested, then you are unlikely to be objective. You may be subjective. So this is the threat. Now we have to how to mitigate that threat. This is the basic focus of discussion in all the subsequent part of this today's presentation. Second is your self-review threat. Self-review threat means with a basic common knowledge concept or common sense concept of maker and checker. Somebody makes it, somebody checks it. But if you are yourself a maker and checker, then it is obviously wrong. So that means self-review threat means quite often, friends, quite often, and these are the real life situations which I am dealing with, that your ex-staff or your staff, your own article or your spouse is rendering the accounting service to that organization. And there are many disciplinary cases coming up on this, because Typically, our chartered accountants, they only recommend their own staff who is rendering accounting service. He may be their article, he may be their ex-article, he may be their employee, or he may be, or he or she may be their spouse or close relative. They are rendering the accounting. Quite often the reality is that it is just shown in the name of those persons. But yes, sometimes your ex-article or your ex-present article or employee is rendering the service. An unfortunate part is that instead of while making the invoice, one has to be careful. I have seen many chartered accountants, I am very sorry to say, that they have raised the bill or invoice as accounting and auditing of your society or accounting and auditing of your organization. Now, this is suicidal. This is self-defeating. If at all that kind of arrangement is there, at least you take care that the invoicing is done separately by another person and insist on the client that he should pay him directly. If at all it's a combined invoice, because these are very practical tips I am giving. If at all it's a combined invoice that you have raised without mentioning the accounting, but you have to pass on the accounting charges to that person, then pass it immediately, take his invoice to you and do it immediately. But otherwise, it is very difficult. So that invoice should be in your custody, but that invoice should be raised or addressed to the client, not to you. But you are passing on, we have collected it on his behalf, sort of, because why many people do like this is that their juniors feel that the client won't be willing to pay that much amount to them if they directly approach him. See, there are practical considerations. I am aware of these things. So, because I am also a very average practitioner, like many of the people in the audience. I have not fallen from the heaven. But yes, what care you have to take, that I am just bringing to your notice. That in practical life, when you are raising an invoice, that invoice also, the wording of the invoice should be also correctly done. I have fought at least 5 to 10 cases where the wording of invoices was played a very crucial role. Now, in the invoice, for example, the person had entered into an agreement with a client that he will raise some finance for him, and he agreed. In the agreement itself, he mentioned that there will be 3 or 5% of his fees of the loan obtained. But although it was agreed like that, in reality, he never charged in that manner. So, overall, considering the circumstances and situations, I could mitigate the gravity of punishment on him, because I said that yes, initially, perhaps while in the agreement standard formats are there, sometimes we agree, but in reality, it did not do so. On the contrary, there were cases where in the invoices, the wording was such that it was very, very much going against them. So please take care that it is not only how you function, how you discharge the duties, but how you raise the invoice also sometimes matters. And these are the self-review threats. Because your own person has done the accounting and you are doing the auditing. So external auditor performing the accounting work himself is surely a threat to the we can say the self-review threat, because you cannot review or you cannot certify what you have yourself written. Next is advocacy threat. Now, advocacy threat, all these again, I am reiterating that all these concepts, if you are clear in your mind, only then the subsequent discussion will have some relevance to you. And if you understand these concepts correctly, then perhaps the subsequent discussion is only as consequential, and you can then only go through the PPT and you can understand it yourself. So please focus your attention on that. Now, next is, as I said, advocacy threat. Advocacy threat means you are yourself promoting something of the client, like if there a public issue is there, you are promoting the public issue of the client. If some other product, financial product is there, you are promoting the product of the client, where you are advocating something, whereas you have to be absolutely independent. You have to be absolutely, you can say that has nothing to do with the actual business interest. Your interest should not be linked with or combined with the client's interest. Yes, of course, your interest is linked only to the extent that the client should grow. But that does not mean because you are as an auditor, you have to be unbiased. You have to be absolutely without any prejudice, without any bias, and you have to be absolutely impartial and objective. So that can be achieved only when you are addressing the threat of advocacy, because whatever you are certifying, that you are likely to compromise on your independence if at all your interest is involved in promoting something on behalf of the client. So please don't do that. So that is advocacy. Next is familiarity threat. Familiarity threat is the one example which I gave just now, that his spouse, which was earlier only a junior clerk in that organization, rose to the position of the chief accountant. And that perhaps is the, you can say, familiarity threat. The familiarity in the sense that auditor is from a very close friend of mine or very close relative, but relative not in the sense of the definition of the relative, but he is very close to me. Then in that case, you are likely to compromise on this, because the term relative, and now clause 4 of part 1 of second schedule of the act says that if you cannot certify the financial statements of your relative, or where of any concern where you or your partner has a substantial interest. So that is clause 4. So that of course is taken that the law itself. But even otherwise, there is likely that the relationship is such that people will feel that because of excessive familiarity with the thing, perhaps you are compromising on your principles. So as I told you, that you should not only be independent, but you should be seen or perceived to be independent. Then final threat is intimidation. Intimidation is, that means there is something, some circumstances which are frightening you. You feel you are afraid of doing certain things because the client may give a threat to you. So that means being threatened with dismissal, or you can say the replacement of the client engagement. That threat is there always. Now these threats are not necessarily mutually exclusive, they are interlinked. But those people who are very junior may not be aware. But when I shared with my colleague who prepared all this PPT, and she was also shocked when I told her that there was a very well-known or a notorious case called Dhanbar Tragedy. It was in the year 1982. And in Dhanbar, there were some mines. And in that one chartered accountant was S.S. Das. And unfortunately, friends, I am very sorry to share that fact with you. He raised so many queries that he was murdered in that case, which is very shocking. So intimidation can be of any level. Of course, when you are doing in this metropolitan city, and we are doing with the large companies and all, this threat may not be there. But to that extent also the threats are there. Minor threats of your losing your assignment and all is okay, it is understandable. But there could be threat even to your life. And that is, unfortunately, that was the case. You can, from the Google also, you can read that that particular thing was very really frightening, not only to that person, but to even when we read that case, it is intimidating to us also. So now we go to the provision of non-assurance service to the audit client, because this is the crux of the topic. This crux of the topic is ultimately related to the objectives and threat that we have just now discussed. So let us now go to permissible service. There is one enlargement of the scope of permissible service. That means the traditional aspect we know, what a chartered accountant in practice, what he should render, that all of us know. What is that? Is an accounting and bookkeeping service. Of course, not to the assurance client, not to the audit client. But yes, we can undertake the accounting and audit job, accounting and bookkeeping jobs. We can do internal audit, but obviously when we are doing internal audit, you cannot do statutory audit. When you are doing accounting, you cannot do statutory audit. Design and implementation of any financial information system. A financial information system, also if it is you are designing, but then whatever you have designed and implemented, you cannot audit it yourself. Then the actuarial services. Now, everywhere there is also, when you are doing, there is one more common factor is that if that service, the outcome of it is likely or is to be a part and parcel of your financial statements which you are certifying, then that is not permitted. So that's a very common principle everywhere. Actuarial services. Actuarial services means you are yourself doing the gratuity valuation. You are yourself doing other things where which are required as some actuarial valuation is required. Then if it is forming part of your accounts which you are certifying, then you cannot do it. So these are the permissible services. Basically, by definition, that chartered accountant can render these services, subject to the rider that these services, all these services cannot be rendered to the audit client or the assurance client. So this is the limitation. Then the next is investment advisory. Now, when I say that this is permitted, this is of course subject to the respective rules and regulations. For example, in the investment advisory services, there could be some SEBI regulations. So that of course you have to comply with. Then investment banking services like mergers and acquisitions or underwriting. Now these are related to the investment banking. Now these services also you can render, but not to the audit client. Then next is rendering of outsourced financial services. Yes, outsourced financial services means you are taking the thing on contract, you are doing financial services, you are even managing their receivables, you are managing their payables, or so many aspects which you can do as an outsourced service. Sometimes even entire accounting task is outsourced to you. So, or the recovery, the receivables that you are monitoring and also recovering, that also is a financial service. Then the management services. Now, management services are like management consultancy services, which is a separate topic. And when you go to slide number 35 or 36 onwards, then management consultancy services means our institute has enlarged the scope of the services that a chartered accountant can render. And they have described as many as 28 services, which is a part and parcel of management consultancy services. When we go to that appropriate slide, we will discuss. But you have to keep it in mind that apart from these services, which just now I am discussing, these are by definition. These are coming in the Act itself. So, but this is coming in the Companies Act. Whatever just now we are going through is as per section 144 of the Companies Act 2013. Earlier, 1956 Act, there was not such categorical, you can say, provision. But as I told you, the times are changing. So times are changing. Therefore, our code of ethics has also undergone a change. Not the ethical values have not undergone the change, but its manifestation, its implementation, these things have undergone a change. So thus now whatever we are reading just now is under the Companies Act 140. So because you have to keep in mind permissibility, for considering permissibility, you have to keep so many aspects in mind. Now, sometimes how the laws are framed vaguely. There was one issue raised in the Ethical Standards Board as to whether a member of a charitable trust can render audit service to that particular organization. For example, there is one social organization, there are 1,000, 2,000 members, you are one of the members. Now, under the Companies Act, we are very clear that if you are having even one share of howsoever big that company may be, still you are disqualifying. You are disqualified for being appointed as an auditor. Actually, the wisdom of that may be, I personally do not subscribe to that view, but yes, it's a law ultimately, howsoever real, or rational or irrational, it's a law. So, and on that also there are many disciplinary cases coming. That person was having insignificant holding of shares in that particular private limited company, which was a very big company, but still, yes, it was a yes or no type answer in the disciplinary mechanism that yes, you are a shareholder, you have violated the provisions of Companies Act. Probably under our code of ethics, there is no such thing. Our code of ethics only say that if you are a part of the management, then you should not accept. So what I'm trying to bring out the distinction between that, under different acts also there could be different provisions which are governing this particular topic. The example which I'm discussing with you is that the trust and not a company. Had it been a company and if you are a member, obviously the answer under the Companies Act itself is negative. But here, if you are a trust, then there was a dilemma. Earlier, they opined that it is not permitted. But then thereafter, they changed their view and they said, no, there was that time this particular question was taken back, was withdrawn. But then because of that, I studied the Public Trusts Act. And in the Maharashtra Public Trust Act, I think it is section 33, very vaguely worded. And it says that person, the auditor, should not be connected or interested in the activities of the trust. Now, what do you mean by connected or interested in the activities of the trust? For example, if there is a yoga institution, I am interested in the yoga activity. I am connected with the yoga activity because there could be some courses which I am doing. But then why there should be a bar on? Because they don't say that connected with the management is a different story. I am not connected with the management. But in that yoga institution, I am interested in yoga, but then I am interested in that organization. But in what sense? So this there are certain situations where the acts are worded very vaguely. So just as I mentioned to you about Companies Act, which we are just now discussing, in the Trust Act also there could be some vagueness or controversial aspect. So management services. So these are all the services which we can render. Now there is one important aspect. Please read that particular top paragraph, which says that this is very important as far as our accepting the thing, because so far what we have been doing is just under the oral understanding. The director tells you, "अरे साहब ये भी आप कर डालो, आप वो भी देख लो, अभी taxation भी कर डालो, अभी GST आए वो भी करो आप," and then we do it. But please read this particular aspect, and I think nowhere this particular aspect has been so much emphasized in any of the presentation. It says, an auditor appointed under the Companies Act 2013 shall provide to the company only such other services. Please read this very carefully. Only such other services as are approved by the board of directors or the audit committee of the company. Remember, this is very important, because usually we only take the letter of as an auditor, like statutory auditor or tax auditor. But in the course of our relationship and work, many other things are also thrust upon us or are interested to us. But then earlier, merely some internal communication, some letter was sufficient. But here particularly, I was also a little surprised or shocked to see this particular thing. It says it should be backed by the resolution of the board. And unfortunately, we chartered accountants are very much careless rather about verifying the secretarial compliances. And that is now assuming more and more importance, because there are many cases which are coming up just because the chartered accountant was never bothered to go through the secretarial, like minutes, the attendance sheets, all the compliances under the Companies Act. If you are not careful about it, you are inviting trouble for yourself. There are many cases which are coming up just because they did not go through the minutes of the board. They committed certain misconduct, or it was concluded that it was a misconduct because they missed out certain things. So remember that when you are rendering a service, it should not be just on an oral understanding or oral instruction, or even written instruction also will not suffice. It should be backed by the board. In fact, at this juncture, I must also share with you one important aspect which every time we miss out, is that we always say that if two directors have signed a particular financial statement, that means we say that yes, okay, it is all right for us now to sign as an auditor. But this is not so, friends. Actually, the Act requires that before the signatures of the directors are put, the financial statement should be first approved in the board meeting. This is very important, and this approval of the board meeting can be verified only by secretarial work, that means the minutes. So what we need to have, we must have, in fact, hardly any of us would have it, is that there should be a confirmation from the company side that these accounts were approved in the board meeting held on such and such. That is of prime importance, because the logical sequence is that the company approves the accounts and authorizes 2 or 3 of them to sign on behalf of the board. The board approves it. So that approval of board is of prime importance. So this is also similar. What I am trying to convey to you is that if you are rendering any other service, just your appointment letter is not enough. It should be now supported. If there is any other service, it should be supported, because as an audit service, obviously it is supported either by the board resolution or the AGM or EGM resolution, because there is no other way in which normally an auditor would be appointed. So what I'm talking of is, other than audit service, if you are rendering any service, that should be approved by the board, which is very important. So this aspect, because it is the direct company law provision, I wanted to draw your specific attention to this particular aspect. Now we will go to the next part of that particular section. There also it says directly or indirectly. That means the other services which are rendered, we should not render directly or indirectly. And what do you mean by directly or indirectly? That is also, if you read the explanation, that explanation, the word directly or indirectly is defined. And it says, in the case of auditor being an individual, then by either himself or through the relatives, the illustration which I discussed with you, that your wife is rendering the accounting service, at least shown to be rendering sometimes. Or your close relative is shown to be, sometimes what happens is your brother, who you have become a CA, but I have seen many people where his brother was not in a position to complete his CA, or even if he is a CA, he renders the accounting service and the other brother audits it. Now, strictly speaking, that is also now not permitted, because that is not permitted not only from the ethical point of view, but the Company Act itself now prohibits. So being an individual, either himself or through his relatives or any other person connected or associated with such individual, or through any other entity whatsoever in which such individual has significant influence on the control, or whose name or trademark is being used. So this is the further elaborate. What I'm trying to do on a day-to-day practice basis, that if your relative is rendering accounting service or is shown to be rendering accounting service, you have to be extra careful under the Companies Act. And then in the form, unfortunately or fortunately, they now typically our habit is there that we are finding loopholes. Here they say, if you are in a partnership firm and not an individual or a proprietor, there the word relative is missing. So they say the firm either itself or through any of its partners, but they have not mentioned relatives. So theoretically, perhaps a situation can be contemplated that where a partner's wife or partner's spouse is rendering accounting services, at least it is not hit under this particular provision. Of course, that's only our academic argument, but as far as possible, you should not indulge into such things. That is why I am saying that you should not only be independent, but you should be perceived to be independent. Now, this was the background. This is the main principles which we have already studied, is on the basis of which all the subsequent discussion is based. There, one of the important concept again is management responsibility, because the Companies Act again categorically says that you should not undertake the management responsibility. Management responsibilities means what? That I have defined in this particular slide which we are seeing. Management responsibility means a firm shall not assume a management responsibility, because then there is a threats. If you are a part of the management, then it is a perhaps self-review threat, because you are yourself managing it, and you are then, in fact, there was one particular case where that person was a member of that club, perhaps it was Rotary Club, and he did the audit, and the issue arose because he was perhaps holding, his partner was holding the position of a treasurer there. And on facts, of course, the case became very weak, because although he was quite independent, because his partner was, the reality was that their partnership was only for namesake, in the sense that they were not really working together as partners. It was just a partnership that that other person who was treasurer of that trust was really speaking not into practice at all. Really speaking, he had almost retired and he was doing the social work. And this particular other chartered accountant who was only actively doing the practice. Now that partner, the old partner perhaps, he was not very active in the profession. He happened to be, as a part of his social work, he happened to be the treasurer of that Rotary Club. Whereas they did not have any connection whatsoever in the day-to-day working of the firm at all. So he was in that sense very independently discharging. In fact, he had qualified the report also. He had done the queries, his working papers also were quite impressive and very self-speaking in the sense that he had done the job very nicely. There was not even an iota of doubt that just because his partner was the treasurer, he had done any favors or compromise. That was very visible. Still, the fact remains that yes, your partner is the office bearer or treasurer of that organization. So you should not. So permissible when we say the management responsibility. Now, management responsibility is firstly setting policies and strategic directions. So setting up policies and strategic directions is the first part of the management responsibility. So you should not be a part of setting the policies of a particular company or any strategic planning of that company. Then the next is hiring or dismissing employees. Quite often, when there is a large organization or even small organization, people say that you only provide us good persons in the finance or good persons in the accounts. You only take the interviews. Now, if you are joining the interview panel as an expert, as an independent person, it is all right. But if you are yourself undertaking the job of hiring the persons or dismissing the person, then it is a management function. So if you are, it's quite often a chartered accountant or the auditor is invited to be on the panel to select an accountant. But he is a part of the panel, he is just acting as an expert there, but he is not undertaking the task of hiring the persons. So you have to be very clear about it. And so also the dismissing, that means you are doing something like a part of the personnel or HR function of the company. So that you should not do. Then directing and taking responsibility for the action of employees in relation to the employee's work for the entity. Sometimes what happens is you have only recruited a person or you have only recommended a person, or there could be certain things which you are undertaking the responsibility that if at all the employee has committed any error, then in that you say that yes, because since he is my person, I undertake the responsibility. That means you are giving assurance to the company that that person is your man and he will perform and he will discharge the duties properly. If that is the situation, then I think your independence is affected because you are taking the responsibility of the action of the employees, which is not permitted. So action of the employees in relation to the employee's work for the entity. Now, for example, if that employee otherwise misbehaves or he does some other error which is not in his functioning, still the fact remains that whatever he is doing the work, you are taking on your shoulder the responsibility of his proper work. So that is also not permitted. Then authorizing the transactions. There are many organizations where they say that it should be pre-approved, all the transactions, all the payments be pre-approved by the internal auditor or something. Of course, we are dealing with the audit assignment, means here we are taking statutory audit. So statutory audit, by no stretch of imagination, even by mistake, he should not be involved in authorizing the transactions because then it's a part of the management. And then next is controlling or managing bank accounts of the investment and or the investments. So there are many chartered accountants I have come across the cases where they were the authorized signatories for the checks. Of course, they were not statutory auditors, but they were doing that. And even that, that brings me to another incidental aspect, that if you are doing that for any organization, and if you are too familiar with them, and if they are having a lot of trust in you, and if you are one of the signatories of the check for that organization, please don't accept to be the signatory and never ever sign the check, because clause 11 of part 1 of first schedule, it permits us, or it says that you should not undertake any other business or occupation without the permission of the institute. Now, if you are signing the checks or if you are signing any documents on behalf of the company, like your appointment letter or any contract on behalf of the company, then you are deemed to be engaged in the business. Whether you are your client or not, whether you are doing the statutory audit or not, you are just undertaking the responsibility of signing the checks or doing the management function. That management function itself is may tantamount to your engaging in the business, other business or occupation. So clause 11 also at the end, I specifically incorporated that slide, because you should not do the management job if at all there is a threat that clause 11, that means engaging in other business or occupation, that could be attracted. So if at all you are a director, you should be a director simpliciter. You should not be signing any documents. You can just attend the board meeting. You can take the sitting fees, but you cannot do anything else. You can guide, you can advise them, but you cannot be doing any function as far as possible. Even the signing of check or signing of financial statements also you should not do. Then reporting to those charged with the governance on behalf of the management. Even that reporting. So that means to the board on behalf of the financial manager, for example, or the finance section of that particular company, if you are undertaking reporting of certain things to on their behalf, to that person charged with the management, means to say board. So if you are reporting to the board on behalf of the management, then that also is nothing but a management function. So that you should not do. Services to related entities, when we say that this particular management responsibility you should not be undertaking. So this is a management responsibility. Then responsibility of preparation and fair presentation of financial statements in accordance with the applicable financial reporting framework. Now that also obviously you should not do, because many of chartered accountants, and sometimes it's a reality also, that small clients or even big clients, but the board is not familiar with the presentation and they don't have an in-house good accountant or a chartered accountant. Then even the presentation of accounts is thrust on the statutory auditor. But then he should scrupulously say that yes, the balance sheet is not prepared by me nor presented by me. He may guide that yes, this is the format in which you should do. This is an error, this you should not, but he should not undertake the work of presenting it in the statutory or prescribed form. Then responsibility of designing, implementing, monitoring or maintaining internal control. In fact, now we have to also report on IFC, internal financial control. Now, if you are yourself doing the internal financial control or systems, then it is a management responsibility. You can render that service, but not to the audit client. So manage these things which we are discussing. I am just focusing on the point that these are the permitted services. Otherwise, management responsibility is otherwise permitted, but not to the audit client. So if you have that assignment itself is of doing that, but at the same time you have to also avoid the risk of clause 11, being engaged in other business or profession. But otherwise you can render these services. So these services are not banned per se, but these are prohibited to an audit client. These services you cannot undertake. Then the responsibility of designing, implementing, monitoring, and then therefore these activities are not permissible where you are the statutory auditor of that company. Otherwise it is permissible. Now at the end also I have mentioned that providing advice on the proper compliances. For example, they would not know exactly that they have to report on accounting standard, they have to report on, they compile so many pieces, so many charts and tables and information. So if you are advising them, it's all right. But merely because you are advising is permissible, but you cannot do it yourself. At least on paper, it should not appear that you have done it yourself. Then we come to the services to the related entity. Now, related means what? The statutory audit you are doing of a company, and there are certain related entities which you should not render services to. So this is also very crucial. Many times what happens is there are group companies. Of one we are doing the statutory audit, and the other company we are rendering certain services. So those services also you should be very careful that you should not render. Firm may assume management responsibilities or provide certain non-assurance services that would otherwise be prohibited to the following related entities of the client, not to the auditor, related of the client, or on whose financial statement the firm is expressing opinion. That means your audit client. So you cannot render certain services to the related parties. Which related parties? An entity that has direct control over the client, other than the engagement to which companies act. So that means suppose there is a company or there is a non-company entity which you are auditing, then you cannot also audit another entity which has a control over this particular thing. So that means the entity which is related, an entity that has direct control over the client. So for example, there is a firm. In the firm, there is a private limited company which is a partner. Now, if you are rendering the service to that private limited company which is controlling this firm's business, then you cannot render the management service or responsibility to that other client, other entity also, because indirectly it means that you are rendering the management responsibility service to this, because otherwise what will people do is, under the garb of this, that means I am not directly rendering management responsibility service to my partnership firm client, but I am rendering the management responsibility, I am undertaking that particular responsibility of the company who has a controlling interest in this. So that means we are circumventing that particular, that is why it says it prohibits that particular thing. And an entity with direct financial interest in the client, if that entity has significant influence over the client. Now here there is no distinct, there is no mention of that your client should be a company or otherwise. In the first clause, yes, it was a non-company SAC. Because otherwise, if it was a company SAC, it is already covered, because you cannot do the audit of subsidiary as well as a holding company. So that is indirectly taken care of. Here I am talking of audit of a non-corporate entity, but you are rendering service to another entity which controls this entity. Had it been a company, it would have been obviously the holding and subsidiary relationship. So this is another thing. For example, if you are given a bank, a small bank is there, and a bank has given a loan to a company. Now, if it has a financial interest is there of the client, if you are rendering management responsibility of that bank, for example, then that also perhaps is a risky affair. These are the situations which I am just describing. Sometimes, as I told you, that there may not be right or wrong type answers, or like yes or no type answers, because it is based on the facts and circumstances of the case. So then there is an entity which is under common control with the client, provided that all of the following conditions are met. That means there are certain conditions. For example, there is a group company, one common holding company. There is one subsidiary A and subsidiary B. If you are doing the statutory audit of subsidiary A, then you are not allowed to render certain services to the other subsidiary B unless all the four conditions are satisfied. These are the four conditions: that a firm or a network firm does not express an opinion on the financial statements of the related entities. So that means even you should avoid that your network firm also should not be rather expressing the opinion on the financial statements of that other related entity. The firm or network firm does not assume a management responsibility directly or indirectly for the entity on whose financial statements the firm will express. For example, I am auditing a particular company, then even my firm or my network firm also should not undertake management responsibility of this company. All these conditions should be satisfied. The services do not create a self-review threat. For example, your network firm is only doing the accounting work, or your network firm is doing the establishing of systems, financial control systems or other things. then it is a self-review threat. So under the garb of your other firm, which if it is a network firm, then you cannot do it. The firm addresses all the threats created. This is the crux, that you have to address all the threats. That means when I speak on working paper management, in your working paper management, this should be specifically discussed, and this should be discussed and noted in your particular working paper, that yes, this is a situation, there could be this threat, but I have handled or I have tackled this threat in a particular manner. Now, as I mentioned to you in slide number 35 or 6, there are management consultancy services which are there. I'll just quickly go through it, because now we have come to the stage where now we are dealing with individually with each and every service under a particular service. But to complete the discussion, I must touch upon what are the management consultancy. Of course, I will not go through the entire list of 28 items, but it is very necessary that you should have, because this is the enlargement of the scope. In short, when I deal with the topic of permissible and non-permissible, these are permissible services, which otherwise there would have been a dilemma. But our institute has very categorically and expressly permitted these services. I am just reading 4 or 5 main ones, then all 28 ones you can then go through. The background is that to empower the members to face the challenges because the institute recognizes that merely doing traditional work of audit or accounting and taxation will not suffice. We should enlarge the scope, so provide the sector. So the council has specifically enlarged the scope. The type of services included in the management consultancy services are financial management, planning and financial policy determination. Obviously, the common thread is that it should not be done to the audit client, because then you are a consultant as well as the audit client. Incidentally, there is one more guideline of the institute, that if you are having the audit of any public sector undertaking or a bank or a public company, and its turnover is more than 50 crores, then you cannot render to them that service which the total fee, if the total fee of the other service exceeds the audit fee. Of course, now because of the Companies Act, this particular thing also will have hardly any relevance, because now section 144 is very clear. But the capital structure planning and advice regarding raising finance, then working capital management, then preparing project reports and feasibility studies. So these are all management consultancy services which you can render the services, preparing budgets, budgeting, costing, all these things where our expertise there, inventory management, then market research, then price fixation, all these things you can do. There is a very long list of 28 services which I am not reading out the entire thing, but I'm just drawing your attention that these are the management consultancy services which are permitted by the institute expressly. So that is why, because since the topic is permissible services and non-permissible, these are the ones which are permissible. So we will go back, rather come back to our basic thing, which is on slide number 11, services provided by auditor. Now here, actually one by one, now in our volume 1, it is divided into many sections as such. Now section 600 onwards, these are the services which are discussed, which are whether it can be rendered or not. This is discussion in section 602 onwards. So in section 602, there are 601. 601 onwards, of course, 601 is the determining the accounting policies, which is now I have given the answers also, so which are self-explanatory. But I am wherever there is something important, I will be discussing. Otherwise, the answer allowed or not allowed, which are, if you apply your mind, it is very clearly mentioned. So 601 says that preparing or changing source documents like payroll records or purchase order or voucher, if you are rendering that kind of a service, which is not allowed. Then originating or changing journal entries. You cannot originate a journal entry, but you can advise on the rectification entries, that yes, if at all the client does not know how to pass the rectification, that you can advise. but you cannot originate the journal entry. In fact, many chartered accountants or auditors, they themselves pass the journal entries and sometimes they pass it in their own handwriting. Of course, now because of the computerization, that is very rare. But still, I have come across earlier situations where the rectification or journal entries were actually passed by the auditor himself, or means auditor's assistant. Even that should be avoided. When it was a manual thing, that was very visible at that time. Then determining or approving the account classification of the transaction. So for example, the transaction is there and you are yourself classifying it where to put, where a particular expense to be put. That also should not. But yes, overall advice you can give. Then applying accounting standards or policies and financial statements disclosure requirements. Yes, this is allowed because you are applying accounting standards means you are advising the client to apply the accounting standards and also the accounting policies and financial statements. Then assessing the appropriateness of the financial and accounting controls. Yes, in fact, you are supposed to report on the IFC, means internal financial control, and methods used in determining the stated amounts of assets and liabilities, proposing adjustment journal entries. Now, yes, proposing adjusting journal entries in the sense that, yes, if there are some rectifications required, you can advise them that, yes, you should pass this, but you should not be passing that entry. So all that is allowed. Then technical assistance on matters such as resolving accounting reconciliation or problems of analyzing and accumulating information for regulatory. For example, typical case is that of tax audit. Now, having audited the particular accounts, if you are helping them in extracting the details for tax audit purposes, for example, or for any analytical purpose or for any regulatory purpose that a particular regulator wants certain information be extracted from the accounts, you can always guide them, advise them, you can even help them in extracting that particular information. Then technical advice on accounting issues, technical advice, yes. A particular head of accounting, for example, or how to present the particular accounting. So accounting and complying with the group transitioning effects. It is basically at the time of transitioning, sometimes many of these issues arise. For example, Schedule 14 of Companies Act, when it was changed, and we were supposed to do mere AS to Ind AS. So if that is the thing, if there is a changeover of the system, changeover of the method of depreciation or method of accounting, then there are transitional things which are there, which the client may be a little confused. The client may not have that kind of knowledge. So you can always guide them, and you can always, even in fact, this new depreciation thing had come that time, and sometimes people get confused under the depreciation, under the block of asset concept under the Income Tax Act, and when it was required, and they mix it up. So even for companies, they do block of asset thing, but in the Companies Act, there are separate rules, separate schedule that governs. And then when there was this new concept came, that time you were supposed to estimate the value as on a particular date starting point, because then we were required to do gross value also you were required to mention, and that was quite often not available at all in many entities. The original cost was not available at all because earlier it was not a requirement for non-corporate entities. So for non-corporate entities, when they said that it was compulsory to show the original cost, then there were a lot of changes or a lot of things that is called the transitioning thing. So if it is a transitional aspect, then you have to explain or guide to them. Then payroll calculations, reports, recording, all these things are self-explanatory, which is basically allowed. Then calculating depreciation. Sometimes depreciation is also complicated. And as you know that under the Income Tax and under the Companies Act, there are many complications also. Sometimes there are extra allowances given under the Income Tax Act. Extra depreciation is allowed. All that, if at all there, you can always guide them. Requires little or no professional judgment. That means here you are simply guide them because it is complicated. So that can be there, but your professional judgment should not be there. Like for example, if they have to assess or they have to estimate the original cost, then you should not determine that particular cost. You guide them that what these are the clues you can give by which they can arrive at the original cost. Then posting client approved entries to the trial balance. Yes, this is allowed because accounting is done. What you are now doing is the only the posting the entry which are basically approved by the client. Audit clients public entity. What are the public listed interest entities? Basically listed companies, or where people's money is involved. Like that could be an insurance company, bank, or pension funds. Now these are public interest entities. They are not said public interest companies, but public interest entities. Preparing financial statements on which firm will express opinion, if at all this service is rendered to that client where you are rendering the financial statement, expressing opinion in the finance, then it is not allowed. So logic is simple, which I in my initial part, which I have already made it very clear. Then accounting and bookkeeping services for related entities, excluding the subsidiary and holding company of routine or mechanical nature, which is allowed. But the condition is there, provided the personnel providing the services in not such an audit team. So it's not a part. Now this is practical only, or rather workable only in large firms. In a small firms, there is always a very scarcity of staff, same person doing everything. There are many chartered accountants where they are having only 2 or 3 employees. Now it is all right for here to say that, but the audit team, everything is there. They are only doing auditing also, they are doing accounting also, they are doing. But yes, you should always think big. So when you grow big, that means you have to bear in mind that your audit team is separate and your other persons who are rendering this kind of management service or other things, they are separate. If that watertight compartment is there, in large firm, that yes, there are different departments only. So valuation department will be different, like advisory department will be different. Then all the forensic will be totally different. So all those things, if at all that kind of a size, if your firm is there, then you have to be very scrupulously observing this thing. But otherwise, audit team member should not be common. Then public interest also depends on the size, number of employees, then the range of stakeholders. So if these are very large, then they automatically become public interest entities. That you can find the definition in section 400.8 in volume 1. So volume 1, when I am saying sections, I am not referring to section of Companies Act or Income Tax Act or anything. I am referring to the sections of that particular volume 1. That means the Code of Ethics, as International Code of Ethics, as adopted by our country in the year 2019. All other that part, volume 2 and all, they became applicable at a little later date, that means 2020. But this particular thing came into force, and under the council's decision, this particular thing is also applicable and mandatory. It's not that just because it is theoretical or philosophical, you can afford to ignore it. It is very much applicable. So this is also, we have to keep in mind. Then word processing services, that is section 602, administrative services. Now, administrative services would include, but that is otherwise allowed. But what are the administrative services? The examples are word processing, in the sense, whatever data is available, if you are doing it just in the presentation in some other format, or you are doing that sometimes like a text auditing, or rearranging the data, like in the Word, for example, Word data is there, then you are rearranging as required for different purposes, which is there, existing Word data is there, which you are simply rearranging, and for different analytical purposes or different statutory purposes, if you are rearranging, that is permitted. So then preparing administrative or statutory forms for the client approval, it is also allowed. Then submitting such forms. monitoring statutory compliance dates rather. So these are also, if you are rendering this kind of administrative service, that means from time to time you are advising the client that now you have to file your return, you have to file your GST return. This is also permitted because that by itself is not a management service or management. This is only administrative service which you are guiding them on that. Then valuation services. This is section 603. Now valuations, everywhere they have given the rider or they have given the permissibility is there, so long as that is not forming part of the accounts on which you are expressing your opinions. So valuation could be for some other purpose. If that is there, then you can always do it. But if you are certifying the figure that you have valued, then that is not permitted. So valuation for tax reporting or for the tax planning purposes, if you are doing the valuation, for example, if you are going to have the stakes in the terms of say development project, real estate development project, for that the valuation is done, which will have a direct bearing on the tax liability. In that situation, that is allowed because you are not certifying the outcome of your valuation report. You are just doing it for the purposes of some other compliances which are direct effect on the financial statements. If it is having, then you are not allowed, but otherwise it is allowed. Subject to the factors such as those factors are mentioned, but let us skip them. You can go through it. Otherwise, it will amount to self-review threat. If at all, obviously, if you are doing some valuation which is forming part of your accounts and which you are certifying, then it's a self-review threat. Then audit clients other than public interest entities, if they are there, then certain services are, maybe the things are not allowed, which are not allowed. If valuation involves significant degree of subjectivity and valuation will have material effect on financial state, then that is not allowed. Then audit clients, public interest entities, where it is not allowed, valuation will have material effect on the financial statement. So see, the basic theme is that self-review threat should not be attracted. Because if you are doing your valuation, which is forming part of your accounts, then it is not permitted because it is self-review threat. Tax return preparation services, which are allowed. How? Assisting the client with the reporting obligations, tax reporting obligations, and advising on the tax return treatment of past transactions. So what effect they will have on the taxation if you are advising on that, that is permitted. Then responding on behalf of the clients to the tax authorities. But remember here, you have to take care that they say that assessment is merely the determination of tax liability. So whatever this person, assessing officer is asking, and if you are providing, that is permitted. But, so that is allowed. But they go to some extent further. That means if it is a litigation, then if the assessing officer has not accepted your arguments and now you are in appeal, and if you are in appeal, so at the first stage, there is no dispute. But if you are involving in the dispute resolution, then it is a self-advocacy threat, because now you are rather seized of the matter that whatever you had done was correct, that which the AO had not accepted, which if you are fighting further, that means at appellate stage, there could be a self-advocacy threat. So in fact, many people are not aware of this particular aspect, but when you are rendering an audit service, and that then you have to explain in your working note as to how your independence is not affected, how your self-advocacy threat, how you have addressed. So that means there are safeguards which are there. Everywhere they have mentioned the safeguards as to how we can do. So you can do the professional expert, we can engage and get the opinion. And who is not an audit team member. For example, if you have a separate taxation department of your firm, and if you have his services into that, then that is permitted. So if you are auditing and if you are yourself representing to the tax authorities in the appellate authorities, then ideally you should avoid it because it is self-advocacy threat. Let some other partner or some outside expert do it. Or having an appropriate reviewer. So that means, of course, these are all theoretical things, and having an appropriate reviewer who was not involved in the providing service review of the audit work. So your audit should be independent. It is like a peer review. So you have an independent person who is looking into the manner in which you have carried out the audit. So that aspect is taken care of. Then for public interest entities, the tax services, this is very common. This is very relevant to us, section 604. It says preparation of tax calculations that are material to the financial statements, it is not allowed. That means if you are doing the tax calculations and you are incorporating them in the accounts, then it is not permitted. Of course, in reality, that we only do the tax calculations, we only make the statement of income and other things and then incorporate it. But ideally, you should not be on paper to say that yes, you have yourself done the calculation. It is done by the client. It is done by the client and you are approving it. Because otherwise it's a part and parcel of the accounting. So that even if tax calculation or tax liability, then you may report that this tax liability calculation is wrong, but otherwise you can guide them. But you should not be on paper to or record to say that you have done the tax calculations. And unnecessarily, ultimately it becomes very embarrassing for you later on also. So it is even for strategic reasons, you should avoid that. However, professional accountant may review the tax calculations and provide recommendation. That's what just now I mentioned, that he can review. But a client is supposed to prepare. It's a management responsibility. Actions that might be safeguard. The safeguards which are now from all subsequent slides, you will find that there are certain safeguards which are mentioned in that particular clause itself, which are the common ones. Using professionals who are not part of the audit team members, or having an appropriate reviewer to look after your or who examines your audit procedures and your audit work done. Then tax planning and other advisory services. Now here also structuring its affairs on tax efficient manner is not allowed. So that means you are rendering the tax planning services, the structuring of the affairs in it. Now that is not permitted to an audit client. Otherwise, yes, you can do it, but not the tax planning is, if you are advisory, you can do to any client, but not to the audit client. To the audit client, when the effectiveness of the tax, of course, it is self-explanatory that you can go through it. 604 is again tax services continued, then actions that might be safe. So safeguard that also we have already discussed. See, otherwise it's a very long topic. Means these are many services, dozens of services which I have listed, but for the benefit of the participants, we have prepared the chart as to which is readily available, which is allowed and not allowed. Tax services involving valuation. So that also, if the same is a part material effect on the financial statement, is not allowed. But if the valuation is subject to external review of the authority, that means you are presenting a valuation which is subject matter of the review by another authority. To take a typical case of a private limited company in their memorandum and articles. In the articles, it is always mentioned that private limited company shares per se are not transferable to outsiders. Court can allot them, but otherwise per se you cannot sell to the outsider. But if there are internally transfers to be effected, like shareholder A wants to sell his shares to shareholder B, in that section 56 of the Income Tax Act may be attracted because of the valuation, because section 56, if it was not at a market value, then there could be an element of gift or income, deemed income. Now for that purpose, if you are doing it, certainly it is not forming part of your accounts. Therefore, that is allowed, because although you are the auditor of that, if the valuation is, and that particular thing is subject to the review of by the authority, because income tax officer is going to examine it. Or there could be other situations where you have to actually get the pre-approval of the income tax authority or any other authority. If that valuation is there, which is to be approved by some authority, then that is permitted. Then actions are safeguards. Safeguards are very common, which I have already mentioned. But the last safeguard is very important, which is not there earlier. Obtaining pre-clearance from the tax authority. Just now I have mentioned it, but here it is specifically pointed out in the note itself. Then 604 again tax services continue, because this is a very you can say very common interest to all of us, which is very close to our heart, because ultimately we are tax rendering taxation services even to an audit client. Basically we do it from tax point of view because we have an obsession with the tax. Assistance in the resolution of tax, which is not allowed, because service involves acting as an advocate for the audit client before it. Just now I mentioned it, that if it is an appellate stage, probably it is not allowed, because then it amounts to self-advocacy. So amounts involved and also the amount involved is material. If it is an insignificant amount for which you are fighting, probably it is allowed. But otherwise, if these two situations are there, then it is not allowed. And again, the safeguards which are provided. Safeguards which are provided again are the common. Responding to specific requests for information, which is allowed. Like tax services, if your ITO asks certain things, or some department asks, not necessarily your assessing officer, but some other department which is gathering intelligence department, if it asks certain information, providing factual accounts or testimony about the work. So all that is allowed, because if it is external authorities asking that information, and assisting the client in analyzing the tax issues related to the matter. So that is permitted. Monitoring of internal control. So now internal audit services. Basically, one has to keep in mind that you cannot be both statutory as well as internal auditor to the same entity, not only for a company, but anywhere. So an internal auditor and statutory auditor cannot be one and the same person or the firm. Now what we are doing is 605 is internal audit services, which are monitoring the internal control. So monitoring the internal control, and again you are certifying as internal auditor, is not permitted, not allowed, because statutory auditor cannot be internal auditor of the same entity. Then next is examining financial and operating. So internal audit services, statutory auditor cannot render. In fact, this nature of service is internal audit service. So internal audit service consists of all these services, which is not permitted if you are a statutory auditor. It is not allowed. A categorical decision of the council also, and it is very obvious that if you are doing the internal audit, you cannot be a statutory auditor. But you can be a tax auditor. Statutory auditor as well as tax auditor you can be, because these both are under different statutes that you are doing. It's not internal conflict as such. Where internal auditor means your self-review or some such threat is there. Then 606 is information technology systems. So information technology systems means if you are introducing something, some like tax packages are there, like Win1 or tax base, if you are just introducing them, then that is allowed. Means designing or implementation of IT systems that are unrelated to the internal control for the financial reporting. So these are, say, tax packages you are introducing. That is already all right. Then designing and implementation. So these are all self-explanatory. That you are like stores management, material management. If you are doing some other services on internal, like information technology field, that is permitted, so long as it does not form part of your figures are not there, which are forming part of your accounts, which you are certifying. Then audit clients, public interest entities, designing or implementation of IT system, not allowed. Then assisting with document, this is basically litigation support service. Litigation service, this is section 607. Litigation support service means assisting with document management and retrieval. It is not allowed if there are factors indicating self-review threats, which are there, such as legal and regulatory environment. Means the situation is there where it is amounting to self-review threat. Acting as a witness, including an expert witness. All these things are not allowed, because then ultimately it is a self-review threat or self-advocacy threat. Litigation support services, that is why I said litigation support means this resolution of dispute like contesting it in the appeal, so that is not allowed. Then legal services. Legal services also, if it, for example, the contract support or supporting in executing a transaction, because it's a management activity, management service it is, management responsibility. So if, for example, if a company has entered into some contract with other, then in that execution of that contract or that transaction, if you are a part of that, then that is not allowed, because then you become a part and parcel of the management, obviously. So it is not allowed if there are factors such as materiality in relation to financial statements and complexity of legal matters and degree of judgment. So the merger and acquisition, for example, if you are a statutory auditor, you should not be involved in the merger and amalgamation or acquisitions. Supporting and assisting in client's internal legal department, that also you should avoid because it's a management responsibility. Legal due diligence and restructuring. Otherwise, you can render this service, but not to audit client. Then acting as a general counsel for the legal affairs of client, that is also not allowed if you are a statutory auditor. Acting as an advocacy role in resolving the dispute. This is that particular thing which I was mentioning, that 608 section, which is that if you are fighting in an appeal, and if that is a part of your financial statements, that the disputes with something which is part of your financial statements, then that is not allowed because it is self-advocacy. Then 609, recruiting services. As I mentioned already, that it's a management responsibility. So you cannot be you can be a part of the team of it as an expert, as a panelist, but you cannot undertake that responsibility. So developing job descriptions and other things which are a part and parcel of recruitment services, that also you cannot render. Developing a process, because it's a management responsibility, it's a management consultancy, sort of, but it is not permitted because you are a statutory auditor, so you cannot shoulder the management responsibility. Friends, most of these things are very common. We are coming almost at the end. With reviewing professional qualifications of applicants and providing, that is allowed, because suppose there are applications issued for the posts of any position like managerial position or CFO in the finance division or finance department, and if you are allowed, but you should not shoulder the management responsibility, because allowed provided personnel of the firm or network firm do not assume the management responsibility. That means your own staff or your network people, network firm also should not undertake the management responsibility. Otherwise, you can just advise them on the qualifications and other things of the applicants. So that is permitted. Interviewing the candidates, but that is also allowed, provided this condition is satisfied, that your firm or network firm should not be undertaking the management responsibility. Recruitment services for audit clients, the firm acting as a negotiator for client's behalf, that is also not permitted. If the service relates to searching for seeking of the candidates, that is not permitted. Then understanding the reference checks or prospective candidates for following positions, that is not allowed, a director or officer, because these are the things the people who are managing the company. So if you are appointing them, then that means it's a management responsibility. Member of senior management, so there also you should not be involved. Section 610, corporate financial services, which are there. These are also, which is self-explanatory, assisting in developing corporate strategy. It's a part of management responsibility. I think the answer is very common to all these things, that identifying possible targets to acquire, advising and disposal transactions, then assisting in finance raising transactions, because it's obviously the common answer is that it's a management responsibility. actions that might be safeguards. These are also, the safeguards are provided. If they are providing these safeguards, then that is allowed. So also corporate financial services involving promoting, dealing in or underwriting the client shares, which is not allowed. Corporate financial services where effectiveness of the advice depends on the particular treatment of the presentation and the audit team. So audit team has reasonable doubt on such treatment, then obviously it is not allowed. Yeah, management responsibility is a part of it. So this I think we have already discussed what is the management responsibility. Then, sorry. So now it is perhaps I have come to the end of my presentation. There is one permissible service clause 11, which I have already discussed, that the director, simpliciter you can be even a promoter of a private or limited company, but you cannot be a whole-time director or managing director or executive director. So you have to be only director simpliciter, which I have already elaborately discussed. There are many chartered accountants which I have come across who are having the only two directors are there, themselves and their spouses, and they are managing that company. That is very, very risky, friends, because then you are obviously acting as an executive director. You are signing the balance sheets, you are signing many things, you are signing the checks, you are signing the contracts. So all that is very dangerous. You have to be very, very careful about it. Promoter director can be there, and to acquire interest in family business in any manner as a proprietary firm or as a partnership firm in the same name and size of HUF. For example, many people do the business under the guise or under the garb of HUF entity, which again is not permitted. About the share transactions and share market trading, of late the institute has permitted, but only for yourself. You cannot render that share advisory or marketing service to others. You cannot render PMS service, for example. Portfolio management service, but you can manage your own portfolio, and if you are doing the trading for yourself, that is permitted now. The very limited permission is given, but you cannot render that service. So these are the things. The conclusion is that, as I mentioned to you, there may not be very categorical yes or no type answer. There are safeguards in certain cases. In certain cases, yes, there are yes or no type answers, which I have already mentioned in my note. Well, as to be very guided by conscience. See, ultimately, ethics is a concept of your conscience. That if you feel that no, you are not comfortable, that if you do it, then there will be eyebrows raised by others, that your independence is questioned, your independence is challenged, then you should avoid that, because unnecessarily you are inviting trouble. Then there are further, whenever there is a threat which is perceived, then you must provide the safeguard which is forming part of your working papers, because working paper management is another important area of code of ethics, where you are working. Every time there is a disciplinary case, the first and foremost thing they ask is, where are your working papers? And your working papers, now this becomes a starting point of your working papers now, because while accepting the assignment itself, but also you have to bear in mind that if later on certain developments are there which create the threats to your work, for example, self-interest threat is created later on. If there is some finance manager and the auditor is now developing some relationship with her, then if he marries her, for example, then probably earlier the relationship was not there, but now she becomes your relative. So then you have to avoid that. So the subsequent developments also need to be considered. And therefore, we need to be careful now, not only in discharging the function, but while accepting the assignment itself. I think I thank the WIRC chairman, vice chairperson, and all the team members for giving me this opportunity. I was benefited, because this is the first ever time that I was asked to speak on this topic. Probably more examples can be given if I improvise on this, but for the time being, this is the best I could do. My colleague Shivani Damle helped me in preparing this particular PPT. So she is doing her CA, I think at that stage of doing CA, coming across such topics and studying it was a great experience for her. So thank you all. I hope that this will be of some benefit to all of you. Thank you and Jai Hind.
Audience may type in the questions if they want to in question answer box or in chat.
Yes.
Sir, one common question is, will you be sharing this PPT with us?
Yes, of course. That I
Yeah.
mentioned also.
Yes.
So that there is no room for any other question because all the questions are tackled there.
Rahul sir, should we be closing this session now? Vaze sir, it was really, as always, it was delivered with elan and it was very engaging, I would say. Especially I like the slides, which were the comparative ones, and they are very easy and practical to understand. Many times these questions do come up that how to go about it. So there's one question which has come up. Can we do accounting and tax audit of non-company clients?
No. Accounting and audit never go together. Because tax audit also ultimately you certify true and fair view. So it's an audit. For all practical purposes, it is an audit. So you cannot do that.
True. Okay. Yes, I think that was the only question which we had today. So I'm sure that people would have benefited from your session. I would like to, as a conclusion, I would say, and I've been thinking about this for quite a time now, that these boards are there, a client is king, customer is God. These are not for us.
True.
These are definitely not for us. So for us, yes. So clients and customers are not king and gods, but the law is.
Yes.
So the question has come up. A moment. When spouse of a CA is working in an organization in finance and accounts department, whether that CA can do certification work.
Just now, as I mentioned, that if that spouse is holding a very responsible position in the accounts, a senior position, because then she has a role to play in the accounting and present. But otherwise, if she is a junior person, probably, but that also the noting should be made in your working paper that yes, her role is not that significant in extracting the details or in preparing that statement.
No, there is a parallel question, sir, that my husband is an employee in private company and soon will be a stakeholder. So can I provide consultancy in same company?
Stakeholder, now the company law itself, now there is a prohibition if it is more than 1 lakh rupees, you and your relative together, the value of the shares, face value. So that depends, because then it is not only governed by our code of ethics, but is also by the Companies Act. So if that, because Company Act by itself does not say that if you are holding, relative is holding the share, you are not disqualified per se, but there is a limit on the holding. If it is above a particular limit, then yes. And suppose then that means we are stakeholder, and if he is a managerial position, then I feel that one should avoid taking that assignment as an
Sir,
auditor.
it would be a consultancy, not audit.
Consultancy, yes, that you can do.
So consultancy would be right?
Yes,
but not independent audit, right?
Not independent audit. Consultancy, yes.
Yes. Sir, there is a question about, can we appeal when we have audited? Madhav Pendarkar, sir, would you please elaborate your question a bit?
Means, no, he was probably referring to whether you can attend that hearing for the appeal. If you are preparing the appeal, I don't think there is any bar, because you are rendering that advisory service. But as far as possible, you should not go and actually attend the hearing or the means appellate, take the appellate proceedings as such.
Okay. So there is a can non-audit services like GST, TDS, accounting fees.
That can be rendered to any person. Who is, you should not be auditor there.
Yeah, but
If it's
in
not
the
an
separate for,
auditable, yes.
okay.
Hmm.
So audit and non-audit service. Okay, relative will not work, right? So wife and husband are together. One is doing non-audit services and another is doing audit services.
Question earlier,
Okay. Okay. So I think we should now conclude the session. Hello, was there, sir? Thank you, participants, for joining in today's session. I think Vazis's connectivity has lost. So thank you very much once again for participating. Whatever queries you have, please feel free to write to us at WIRC, and we will surely pass it on to Vazis, sir. Thank you once again. Nisha ji, हम close करेंगे session.